Yeah, good evening, everyone. There is a slight change in the schedule, as Bright Sir informed in the last class. So this week we will have economic survey. So, oh, one second. Am I audible? Okay. Yeah, I think now it should be fine. So let's start the class. So today we'll be discussing economic survey, major observations in the economic survey. And today some of the interview students are also attending the class. Okay, so that is the reason we shifted the economic survey to this week. So your test also will be on economic survey and budget. So this week you will be revising after tomorrow's exam. You will be revising economic survey and budget. Okay, so most of the questions will be asked from economic survey and budget. How the questions will be asked, we will discuss in the present class as well. So you will understand how to revise economic survey. Okay. So let's start the class. So first, let's start with important observations given in the first economic survey chapter. So recently slowdown in global manufacturing, especially in Europe and parts of Asia. So economic survey is saying that recently, there is slowdown in global manufacturing, especially in Europe and parts of Asia. Now, there is a reason given. So, is this a reason or not? You have to see. Okay, this is due to supply chain disruptions and weak external demand. So, these type of questions nowadays they are asking you. Especially last year, they asked about US debt. So, some questions, observations from economic survey, they may ask. And even interview also, they may ask, why do you think there is a slowdown in manufacturing? So, will so tell me the answer here. I think you know the options of statement one, statement two, right? So statement one, statement two are right, and explanation is right. Next is statement one, two are correct, but explanation is wrong. So in that way, you know the options. Yes, the answer is definitely A. So recently, the slowdown in global manufacturing, especially seen in Europe and parts of Asia. Okay. So can I say in India also more or less we are seeing a slight slowdown in manufacturing? In India as well, we are seeing a slight slowdown in manufacturing. So why do you think? What are the reasons? Why do you think there is a slowdown in manufacturing in India? Demand, okay, fine. One is demand. Outside demand, like for example, if there is a global demand is less, if global demand is less, is it impacting manufacturing sector of India as well? Overall global demand is less now. Okay, so definitely it is going to impact the manufacturing industry of India as well. Okay, apart from that, yes, supply chain disruptions are also impacting India. So weak external demand is also impacting India. So these are some reasons why even this manufacturing growth is bit low in India. And in like interview questions also, if they ask, you can definitely prioritize your options. Next, state of the economy. So, in the state of economy, how questions can be asked in prelims as well. So, slowdown in global manufacturing, especially in Europe and parts of Asia. Just now we have seen why. Okay, due to supply chain disruptions and weak external demand. Yes, war in the sense again, the war will come under what? It will come under supply chain disruptions itself. Okay, and also you can say war different demand. Okay, so demand also could be impacted. So in contrast, the service sector performed better, supporting growth in many economies. So overall observation is that service sector performed better, supporting growth in the many economies. Can I say this for India as well? Thus relative to manufacturing sector, service sector has performed well in the recent years. Yes, definitely. And especially service sector exports. Service sector exports have performed well in the recent years. And inflationary pressure eased in most economies. Can we say that? In recently, inflation pressures eased in most of economies. Yes, more or less, if you see, yes, statement two is also right, Soumya. Statement two is also right. So inflationary pressures eased in the most economies. However, their service inflation has remained persistent. So they are saying that in inflation, more or less, yes, it is kind of reducing. But remember, services inflation has been remained persistent. Okay. So now they are talking also about something called what last mile disinflation. So any idea what is last mile disinflation? Recently, the previous RBI governor was talking about last mile disinflation. So they may ask the like what is last mile disinflation. So direct ABCD question can be asked. So you should know what is last mile disinflation. So let us see what is last mile disinflation. So Shashikant Das, the former governor, has emphasized the importance of addressing the last mile in disinflation, a critical step in reducing the inflation further. So basically, it is nothing but the final, most challenging stage of bringing inflation down to a target level. So a signal that the RBI might maintain its current interest rates longer than anticipated because that last mile inflation targeting is still left. That is the reason the RBI might maintain a current interest rate longer than anticipated before considering a shift in monetary policy. Okay, what happened recently that we'll discuss anyways. But anyways, you just have to know the word. What is this last mile disinflation? Okay, nothing but it's the final stage where it could be a bit challenging to bring the inflation rate down to the target level. Why it is challenging? So why this last mile disinflation, bringing disinflation will be challenging? Because what is the situation going on in the global economy? There are geopolitical tensions. Okay, there are ongoing conflicts. There are trade policy risks. Trade policy risks continue to pose significant challenges. For example, recently this Trump administration is there. So what is trying to do? What type of trade policy risk are will you be seeing in the coming days? Tariffs, very good. Tariffs. So protectionist measures, very good. Protectionist measures or tariffs, you can say, or non-tariff measures, you can say. Even non-tariff measures also will increase. Can we say that? Not only tariffs, even non-tariff measures also will be increased because of the protectionist attitude. So both may impact. So all these things are there. So this last mile disinflation could be impacted because of these reasons. So what does IMF estimate based on growth? Some basic IMF estimates you have to know. In not exactly, maybe in UPSC they will ask for, but in some of the exams they try to ask what is the recent IMF projections. Just you need to have idea. Okay, so the global economy grew by 3.3 in 2023, whereas IMF is saying that in 2024 it will grow by 3.2 and 2025 it will go by 3.3. So, okay, the basic things you have to know. Okay, how much generally the economy may grow in the coming years according to IMF. Okay. So, World Economic Outlook is given by IMF or World Bank. The World Economic Outlook, IMF World Economic Outlook, it is given by IMF and not World Bank. Okay, so the overall economic outlook. So the outlook says that what will be the growth rate in 2024 and 2025? What will be the growth rate in 2024 and 2025? 3.2 and 3.3. Mostly like in state exams, they may ask, maybe in UPSC, we do not know. Nowadays, UPSC also tends to ask questions like state exams. Like for example, last year, we have seen this military questions, which are generally asked in the state exams. Okay, or we have seen this military exercises question. I was like last year 2024. Is there any military exercise question in the exam? What was that question? Joint military exercise, Mitra Shakti. Yes. So these questions are generally asked in the state exams. Okay, but in UPSC suddenly they asked last year. So you have to be prepared with these type of questions as well. Okay, so IMF projections also sometimes they may ask. So what does the term synchronized inflation mostly likely refers to? So the economic survey talks about synchronized inflation, and the interview students also remember you need to use these words whenever they ask you what is the global situation happening. Okay, what do you think about the inflation? So these economic survey terms you have to use in the interview as well. Okay, so what does the term synchronized inflation mostly likely refer to? Very good. The occurrence of inflation at similar rates from across multiple regions due to interconnected economic activities. Interconnected economic activity. This is called synchronized inflation. Okay, so that is what we are experiencing and presently in the globe as well. So synchronized inflation is when the inflation rates of multiple countries are closely aligned, and it can be a sign that country's economy is closely linked with other countries' economy. Escalating tensions pose risk for synchronized price increases, undermining the effect of inflation mitigation. Can we say this? So in the answers, you can use this like synchronized price rises. Okay, can in fact impact India as well. So, for example, due to war and all, this tariffs increase and all, if there are price increases in other countries, can I say it will impact India as well? Such price increases? Definitely, yes, because we can see here when the inflation rates are multiple countries are closely aligned, and it can be a sign that country's economy is closely linked to other country economies. So that is one of the reason why the governor is also talking about synchronized inflation. So there could be an impact of synchronized inflation on inflation mitigation in India. So this concept also you can try to use uh, in the interview as well, and for prelims also it is important. Next, coming to economic survey to know 5 reasons why manufacturing sector faces growth challenges, especially in India. So what are the 5 reasons, especially in India, why this manufacturing growth is facing challenges? So the main 5 reasons which are given is the manufacturing sector faced pressures due to weak global demand. Weak global manufacturing sector faced pressures due to weak global demand that we have seen now. Next, aggressive trade and industrial policies in major nations. Aggressive trade. This comes under what? This comes under trade tariffs or non-trade measures as well. Manufacturing subsectors facing challenges. For example, in India, mostly the recent subsectors which are facing challenges are steel sector and cement sector. Okay, so especially cement sector because of the heavy rains and all, okay, it has like prices have decreased. Whereas in steel sector, because of the price pressures in the global market, this also was impacted. Okay, so that is the reason some subsectors also have been impacted in manufacturing. Next, supply chain disruptions we discussed already because of the war, because of different, especially in the Red Sea, and because of these things, supply chain disruptions have been observed recently. Okay, your situation in the Middle East, situation in the Ukraine-Russia crisis, and even in Southeast Asia also, if you see Myanmar. So a lot of places, global conflicts are going on, and these conflicts are impacting supply chain disruptions. And one more very important point mentioned in the economic survey is Panama Canal. Why do you think what happened in Panama Canal, which impacted almost 5% of the global trade? There is a particular event that happened at Panama Canal in the few years, and that is one of the major reason. Yes, there is drought. There is drought. The continuous drought has resulted almost 40% decrease in the volume of carrying capacity of that canal of water, and that is the reason it has disrupted the supply chain disruption because of the drought. Remember, it is not like USA control and all. The major reason is drought. Okay, so because of the drought, there is decrease in water level and all, and it has actually impacted supply chain disruptions. That is one of the major point also mentioned in economic survey. So next, dependent on costly raw material imports. Again, same thing, polysilicon, sorry, that is wafers. Okay, so that is not wages, wafers. Wafers and ingots, which are basically used in solar sector. Okay, so solar sector. And all this basically we are importing from which country? China. Okay, most of these things are being imported from China, and we are dependent on this. And because of that, again, there is a like this dependence also is impacting our growth in this particular sectors. So now, who gives industrial outlook survey? So all these are basically mentioned in the industrial outlook survey. So industrial outlook survey is given by RBI. The RBI gives industrial outlook survey, and all this have been mentioned in this industrial outlook survey as well. Okay. So next, purchasing managers index. So basic difference between any other index and purchasing managers index is more or less it talks about more about what happens at the end of the decision making within the factories. Okay, like decision making means how many new orders are there, what could be the output, how much employment they have to take, what should be the supply delivery times, and then stock of items purchased. All these things they take into account. That is basically purchasing. It is not just output. Generally, other indexes you see they are based on what? They are mostly based on just output. Okay, how much output is there? But purchase managers index is not just output. It is a lot about the inputs as well. Inputs like suppliers delivery times are there, what orders have come, okay, how many how many employees are there, how many new employment has come, okay, and stock of items purchased as well. So all this comes under purchasing managers index. So basically it's a kind of survey given to the, let us say, CEOs of the companies. Okay, you can consider in that way. Okay, so it's a detailed survey which is given to the CEOs companies. They basically fill this surveys. Based on that, okay, the PMI index is decided. Okay, again, different companies give PMI index. Okay, you don't have to know exactly which company gives, because different, like there is HDFC PMI index, there is different PMI, so you don't have to know. But overall, what is the concept of PMI? You have to know. That's it. So it is not based on asset output. It also takes decisions of purchasing. Okay, at the purchasing level. So it measures activity at the purchasing or input stage. Okay, input stage. So there are two types of PMI: manufacturing PMI and services PMI as well. So these are the basic concepts you have to know about PMI. Next, PMI number greater than 50 indicates expansion in business activity. True or false? PMI number greater than 50 indicates expansion in business activity. Definitely yes. Okay, if it is above 50, it is basically expansion in business activity. If it is below 50, then there is contraction in the business activity. Next, it also mentions about, survey also mentions about dissaving by government. Dissaving. So in the exam, if they ask you what is dissaving, so can you answer it in one word? What is dissaving? Deficit, yes, very good. Dissaving is nothing but deficit, mostly, but it is considered more of a revenue deficit, okay, rather than fiscal deficit. Mostly it is considered as a revenue deficit. So whenever in the answers, if you see in prelims question, if they ask you dissaving and some option related to revenue deficit is there, mostly that will be your answer. Okay, so dissaving is nothing but whatever savings are there by the government will try to use, and also it will borrow money to fund its expenditure. So that is called dissaving. Especially it focuses on revenue deficit. Revenue deficit. So this situation means that the government will have to borrow not only to finance its investment, but also its consumption requirements, especially consumption requirements. Okay. So here you can see in the graph, so basically this is savings by private corporations. Okay. And sorry, this is savings by private corporations. And this is household sector savings. And overall, this is the savings. And here, this is deficit or current account deficit. And then there is this minus 2.3 is basically dis-savings. Dis-savings means more or less revenue deficit. Okay, it is close to revenue deficit. Okay, now if I try to answer this statements. Household savings are greater than savings by private corporations. See, UPSC tends to observe especially these facts in the exam. Either they'll use greater or they'll use one more word. What is the other word apart from greater? In fact, yes, are more than savings by private corporations, or they'll say higher. Higher word is also used. Okay, higher than savings by private corporations. So persistent government receiving may imply a greater reliance on foreign funding by private corporations. Persistent government receiving may imply a greater reliance on foreign funding by private corporations. Is it true? What about statement 2? To understand statement 2, first of all, you need to understand the borrowing aspect of government. If government starts borrowing from the market, what will happen for private corporations? Do they have money to borrow? Do they have money to borrow? They will have less money to borrow, which is called, yes, crowding out. Crowding out. So that is the reason. Now, can I say they rely more on foreign funding? They will rely more on foreign funding. Yes, once domestic possibility is less, obviously they will rely more on foreign funding. So this is also one statement given in the economic survey itself. And yeah, you can say external commercial borrowings. So persistent government receiving may imply a great reliance on foreign funding by private corporations. So this statement is given in the survey, and sometimes in UPSC, direct statements are taken from the survey. Okay. So I hope you understood the statement. Okay. Next, in the same thing, they are mentioning that defense, railways, and road transport account for about 75% of the capital expenditure. So now in the exam, how this question will be asked is, they will ask you by using the word most of. Most of the capital expenditure is defense, railways, and road transport. Is it true? Most of the capital expenditure is defense, railways, and road transport. Definitely it is true. Okay, these three combinedly almost account for 75% of the capital expenditure in India. Okay, and no states in India revenue surplus and fiscal surplus. Is it true or false? No states in India revenue surplus and fiscal surplus, both. So this also one of the observation in the economic survey. So no states in India revenue surplus or fiscal surplus. There is one state which is revenue surplus and fiscal surplus recently. You can see here, which is which state? Odisha. Odisha has revenue surplus as well as fiscal surplus. Whereas most of the states, if you see, are most of the states are they have revenue deficit as well as both revenue deficit and fiscal deficit. And see, the size of the circle is there, right? Size of the circle is percentage of capital expenditure. Remember, okay, the size of circle. Here you see actually the size of circles are big. Okay. means here actually percentage of capital expenditure is high. Okay, to percentage of capital expenditure of total expenditure is high. So what the observation is saying that, okay, so here one thing you know this. Second, you have seen most of things are there in this graph. Whereas here, if you see the circles are bit big, so this means that the percentage of capital expenditure is relatively high compared to total expenditure. So what the survey is trying to say that when states invest more in capital expenditure, can they get more or less revenue surplus over time? Can we say that? So this basically this graph says that if they invest more in capital expenditure, then slowly maybe they can also improve their revenue surplus. So this is one of the observation given by the economic survey. So in the exam also they may ask you. So I'll repeat the statement. I'm just saying that if a state invests more in capital expenditure, okay, so over time, can it also better its revenue surplus? That is the observation here. Okay, so what economic survey is saying that is the observation here. So if you try to invest more in capital expenditure, over time maybe you'll also your revenue deficit will improve and it may come under revenue surplus as well. Yes, the larger circles, basically the size of circle indicates percentage of capital expenditure. Whereas if you see here, state with relatively less capital expenditure, what is happening? State with relatively less percentage of capital expenditure, what is happening? They have revenue surplus or revenue deficit? They have revenue deficit. Okay. So that is one of the observation. Okay. So next, what has the survey is talking about inflation. So recently inflation has decreased a bit. So there is retail inflation, there is core inflation again. So in like normal basic questions, they can ask what is headline inflation and what is core inflation. So here overall headline inflation of CPI has decreased from 5.4% to almost 4.9%. So why it has decreased? Again, some reasons you have to know if it is asked. Why it has decreased? So tell me, it decreased because decrease in food and fuel inflation, or it decreased because decrease in core inflation? What will be your answer? It has decreased because decrease in food and fuel inflation, or it has decreased because of core inflation? Definitely, yes, it has decreased because decrease in core inflation rather than food and fuel inflation. Okay. So what is the difference between core and headline inflation? So headline inflation includes everything, like almost all the products basket, like petroleum, gas, vegetables, fruits, transport, housing, everything it will include. Okay, it is called headline inflation, nothing but CPI. The main CPI inflation is there, right? It is called headline inflation. Whereas if I talk about core inflation, so if I talk about core inflation, headline minus, yes, headline minus what? You can see here. See, headline inflation includes housing, transportation, medical, electronics, food, and energy as well. That is called headline inflation. Whereas core inflation is basically till here, and it does not include food and energy. Okay. So now, what is the major reason for decrease in inflation presently in India? It is because decrease of core inflation. So in interview also, if they ask you why the recent inflation has decreased and all, you need to mention that as such the food and fuel inflation has not reduced, whereas the reduction has been actually seen in core inflation. Then they may ask you what you need to do, how to reduce and all. So accordingly, you can answer. Yes, food inflation is still persistent. So the decline is attributed to 0.9% point reduction in core inflation. But did the consumer food prices index decrease? Did the consumer food price index decrease? Definitely not. The consumer food price increase did not decrease. In fact, it has increased from 7.5% to 8.4%. So can you tell me what is the percentage share of food and beverages in CPI and fuel also? Add fuel to it. Tell me total share. What is the percentage share of fuel, food, beverages, and fuel? So that is the reason I am taking that basic economics classes. In the basic economics classes, I explained this clearly. So it is almost 45 plus 6, 6.5 or something. Okay. So 45 is food and beverages, 6.5 is fuel. Okay. CPI combined. I'm talking about CPI combined. Okay. So total around, it will be around 51 to 52%. Rest of the entire 49 to 50% is basically core inflation. Okay. So primarily this inflation of food inflation is because of two things. One is vegetables and pulses. For example, in vegetables also, especially which are the three products where inflation is high? Yeah, it says that tomatoes, onions and potatoes. But anyways, in tomatoes, a slight decrease is there. But still, the survey shows some graph and says that in top, if top is removed, so you can see clearly the percentage of graph has decreased. Okay. So here you can see CPI inflation, and this is CPI food inflation, and here it is core inflation. So always remember, core inflation is less, and combined inflation is here, whereas food inflation index is very high. Okay, so relatively you have to remember. You don't have to remember the exact percentages. Relatively you remember. That's it. Okay, coming to exports, what does survey say? India's robust services exports have propelled the country to secure seventh largest share in global service exports. So sometimes this keywords as sixth largest, fourth largest, fifth largest, third largest are generally asked in the exam. So what is the rank of India in exports of services, global services exports? The rank is seventh largest. Even you can do a simple exercise. So you can just download the document. There are almost, I think, especially of this exports and all, I think 6 or 7 economic survey documents are there. In that you just type largest. Okay, largest or largest share. Automatically you will get some important content. Okay. So in that way also you can know some important facts. So seventh largest share in global services. India's forex reserves are sufficient to cover 90% of the external debt and provide an import cover of more than 10 months. Okay, more than 10 months. So more than 10 months we can cover imports. We have that much money now. And also we can cover almost 90% of the external debt. So external debt is somewhere around 750 billion or something. So we have almost nearly 700. Okay, 700, nearly 700. It has recently decreased maybe to 640 or something. So these two statements you have to know about exports. Next, okay, try to answer this question. So opposites or variables are asked in prelims a lot. So already we have seen, for example, capital market. What is the opposite that can be asked in the exam? Money market. Okay. For example, there is primary market. What is the opposite they can ask? Secondary market. Okay. So for example, unsecured. What is the opposite they can ask? Secured loans. So all these opposites have been asked in the exam already. So again, in 2025, they may also ask unsecured, because this is even in economic survey, unsecured loans has been discussed. So tell me here, what is the answer? Which of the above is are unsecured loans? See, unsecured. First of all, unsecured means what? Simply define unsecured. Unsecured loans. Simple, yes, no collateral. That's it. Okay, no collateral. So here if you see payday loans are basically loans you take based on your salary. Okay, you will say that in the next month, once your salary is there, you will try to pay the loan. So that is called payday salary. Okay, on pay slips, yes. Depends upon the pay slips. And it is also basically not collateral. Okay, so there is no collateral for that. It is unsecured loan. Credit cards, you already know. Credit cards are secured or unsecured. Credit cards. Credit cards are definitely unsecured loans. As such, you don't pay any collateral. So most of the peer-to-peer loans, see, generally, yes, if they ask just peer-to-peer loans, see, peer-to-peer loans can be secured or unsecured also. Okay. But most of the peer-to-peer loans are basically unsecured. Okay. Most of, that is important there. Most of. So next, merchant cash advance, nothing but when people do business and all. So they'll say that they'll deliver some goods and all. Before delivering itself, the merchants can take some advance as well. That also comes under merchant cash advance. And as such, there is no collateral for that. Okay. Just that you will say that, yes, you will deliver the goods. So that is also more or less, you can say, unsecured loans. Whereas car loan, what is car loan? Car loan is definitely secured loan. Why? What is the collateral there? Car itself. Yes, car itself is the collateral. And even the house loan also. House loan, what is the collateral in house loan? The house itself. Okay. So in that way, house loans and car loans do not come under unsecured. They come under secured loans. Okay. So next, coming to financial stability report, which is given recently by RBI. So what it is trying to say is the gross non-performing assets in the banking system have declined to a 12-year low of 2.6% of gross loans and advances. So for interview as well, so basic idea you need to have, are they decreasing or increasing? You can definitely say that. So what improvements have been done in the recent economy? If they ask you, like you have seen transcripts, they are trying to ask basic questions like, okay, what are the recent reforms or what is the impact of the recent reforms and all? Definitely you can mention that non-performing assets of banking especially have decreased. Okay, so you can see it's almost 12 year low of 2.6% of gross loans. And the area of concern within the banking system is the stress on unsecured credit, especially personal loans and credit cards. So that is the reason we are discussing unsecured. So remember, sometimes UPSC does not ask direct things from the economic survey. It always tends to ask in the indirect way. Okay. So if you are reading, for example, last year, if you remember, from economic survey, we discussed greenfield projects. Anyone, if you remember last year class, one slide particularly was there for what are greenfield projects or what are brownfield projects, and that question was asked in the exam. Though yes, we did not directly discuss Vijayawada is there or not, but yeah, if you apply some logic there, you can definitely answer that question. Okay. So in that way, economic survey keywords are used to ask questions in the exam. So what does the term financialization primarily refer to in economic discussions? Again, this recently has been mentioned by the chief economic advisor. So properly an article is there in Hindu as well on this financialization, and this can be asked in the prelims as well. Financialization. So what does the term financialization primarily refer to? Okay, financialization. So financialization again, see, always thinking first of all in dictionary terms. Remember, always words will be very confusing. First thing to address any question in the exam, especially with words, think in dictionary terms, dictionary meaning terms. You will at least try to narrow down on the options. So financialization, if we say it's a financialization, these type of words, if you use according to the dictionary meaning itself, tell me which is very close. So when we say financialization, Or let us say, if I say feminization, if I'm saying feminization of agriculture, what does it mean? Feminization of agriculture. More women in agriculture, very good. More women in agriculture. Okay. In the same way, if I say financialization also, it has to almost be same, right? So it is more financialization, means more aspects of financial institutions or increase in the size. Okay, can we say that? Increase in the size goes with the term financialization. Okay, so always dictionary meaning first, then if you are unable to understand, then okay, fine, then you can move to the next understanding of the question. But first, most important is dictionary meaning. So the process by which financial institution and market increase in size and influence over economic policy and economic outcomes is called financialization. So why recent chief economic advisor has mentioned this? Because he says that dominance of the role of financial markets in public policy might distort macroeconomic outcomes, because these financial markets will work on more profits and all. Okay, so finally it may distort, in fact, macroeconomic outcomes as well. In fact, he also mentions that India's stock market capitalization is 140% of the GDP. What is market capitalization? Nothing but total value of company shares. Whatever companies are there in the stock market, entire shares, if you calculate, that is basically market capitalization of the stocks. And it is almost 140% of the GDP. So financialization is increasing, and also this definitely may result in maybe inequality as well, which has actually seen in the developed countries as well. Okay, so this is what he mentions. So what are the consequences? So what will be the consequences of financialization? What will be the consequences of financialization? First of all, remember, it is not as such a positive word. It is not as such a positive word. Remember that. Financialization as such is not a positive word, because basically talking about dominance. Dominance is a negative word. Dominance of the role of financial markets in public policy. So it has basically negative consequences as well. It has basically negative consequences. For example, the consequence of such financialization, because see, in interview also, this is an important thing, because you will not understand that it's a negative term. So if they ask you, kind of you can say, yes, you need to also talk about the negative aspects of financialization. Yes, that financial inclusion, everything is there, but it has a kind of negative connotation. So they are saying that the consequences of such financialization are evident in many advanced economies, including unprecedented levels of public and private debt. What will happen with financialization? There will be high public and private debt. Economic growth increasingly dependent on asset price inflation. Asset price inflation, nothing but, like for example, let us say the economic growth is mostly dependent upon the increase in stock prices. Okay, so you just replace asset price with the stock price. That's it. Okay, so increasing, so everything is dependent upon the bonds increase, everything is dependent on the stock price increase. Okay, so in that way, economic growth is more dependent on these aspects. And there is a massive surge in inequality also in the economy if there is more financialization. Okay, so asset market considerations that may overly influence public policies in such scenarios. Okay, even the public policy also, it will try to impact. So these are some negative consequences. Yes, other consequences, more in finance inclusion or digital penetration of finance, everything will be there. But as such, it has a negative consequence as well. Okay, now considering the following statements, we'll discuss a few points about unemployment also, which is mentioned in the survey. So unemployment rate has increased over last 5 years. True or false? Unemployment rate has increased over last 5 years. True or false? Labor force participation has steadily increased year on year in the last 5 years. Labor force participation has steadily increased year on year in the last 5 years. Rural employment is higher than urban employment. True or false? Rural unemployment is higher than urban unemployment. Okay, so these are some observations given in the survey regarding unemployment. So we'll just see now. With this one slide, you'll understand everything. First of all, we are talking about unemployment rate So unemployment rate, tell me it has increased or decreased in the last 5 years. Unemployment is black color. Okay, more or less it has decreased in the last 5 years. And what about the labor force participation rate? Is it increasing year on year? Labor force participation is blue bar. So in the last 5 years, if you see, maybe from 2020 you have to calculate. So you can see it is actually increasing. In fact, it is steadily increasing. Generally, see again, steadily increasing keyword is 95% times wrong in the exam. Okay, but some observations in this way will be there. That is the reason I'm covering this. Okay, in prelims, 95% of the time steadily increasing is wrong, because any indicator increasing steadily has very less chances in the economy. But yes, some exceptions definitely will be there. That 5% exceptions we will try to cover whenever such exceptions are there in the survey. Okay. So here you can see, yes, labor force participation rate is actually steadily increasing in the last 5 years. But what about rural employment? Is it higher than urban employment? Actually, remember, always urban employment will be, unemployment will be more, urban unemployment will be more than rural unemployment in general. Remember, okay. There are some reasons for that. So if they ask you what are the reasons, can you tell me what are the reasons? Why do you think urban unemployment is more than generally rural unemployment? Urban, I'm saying urban. Why is urban unemployment more than rural unemployment? Migration for jobs, very good. That migration, lot of people migrate from village to urban areas. So what happens here? There will be a lot of labor. Okay, when a lot of labor are there, definitely some of the labor may not find jobs as well. Okay, so that is one of the reason. Anything skill? Yes, skill also. Sometimes can I say educated unemployment is there in urban area? Educated unemployment. Okay, we can call it educated unemployment, because sometimes skills may not match. Okay, or sometimes high skill is there, but there is no job for that particular sector. Okay, so these things happen. That is also one reason. Yes, informal sector also, you can say a lot of informal sector is there in urban areas, especially manufacturing and all. That is also one reason why there will be urban unemployment. So urban employment is generally higher than rural unemployment. Okay. So here annual periodic survey. So past 15 years, if you from age of 15 years and above, has steadily declined from 6% to 3.2%. Yes, disguised unemployment is anyways there in agriculture. Growing trends towards formal employment, which enhances workers' access to social security and stability. So survey is saying that though, yes, we are seeing urban unemployment and all, but survey says that formal employment is increasing in the country. Formal employment. How do you measure formal employment? What indicator they generally take? Any idea? Social security, yes, exactly. What is that social security they count? PF, yes, EPFO accounts. So generally EPFO accounts, if you see, okay, you will get that if it is formal employment is increasing or not. Okay, next. What is the most likely impact of Reserve Bank of India withdrawal of accommodation policy stance? What is most likely impact of Reserve Bank of India withdrawal of accommodation policy stance? So sometimes in news, you see these type of statements called withdrawal of accommodation policy stance. So what is it called? Withdrawal of accommodation policy stance. Okay, basically remember there are three stance. One is accommodation policy stance, other is withdrawal policy stance, the third is neutral stance. Okay, so any stance can be asked in the exam. So neutral stance indicates that RBI maintains flexibility in adjusting the policy. So according to the data received and all, it will take a decision to increase or decrease. That is called neutral stance. So whenever you see RBI policy this meeting and conference, when you see in that conference, first thing they'll reveal what stance they are taking. So whenever you see such conferences, you will see these words. Either it will say neutral stance, or it will say that withdrawal of accommodation policy, or it will say they'll follow accommodation policy stance. So the neutral stance is generally adopted when both inflation control and economic growth are given equal priority. Both inflation control and economic growth are given equal priority. Then RBI takes that neutral stand. Okay, so when it is adopted, it is basically adopted for maintaining the balance between inflation and economic growth. Then comes the withdrawal of accommodation. So withdrawal of accommodation refers to more restrictive monetary policy stance where the RBI aims to reduce the money supply in the economy. So recently, I think yesterday only, right? Yesterday or day before yesterday, they have reduced. So what is the stance now? If RBI has reduced the repo rate, if the RBI has reduced the repo rate, so recently RBI has reduced the repo rate, right? So it will come under accommodation stance. Accommodation stance. So whereas opposite is withdrawal of accommodation. So this thing. So again, for interview students, they may ask you like, why do you think RBI has reduced the repo rate? So again, you will connect that with the inflation as well. Okay, more or less, inflation is moderating as well. So in inflation, especially which type of inflation is moderating? Okay, core inflation is moderating, and recently, kind of this food and fuel inflation also is kind of moderating. So that is the reason maybe RBI has taken a policy cut. One more thing, policy cut also is important for what? To increase what? To increase money supply in the market as well. Yes, money supply in the market as well as demand in the economy as well. So that is also one reason why they have taken that. They have taken the decision of policy cut. Apart from that, they have also increased. They have also reduced CRR. So earlier CRR was 4.5. Now it is 4%. Okay, in December itself, they have reduced it to 4%. Again, this comes under what stance? Withdrawal or accommodation? It comes under accommodation stance. Again, a country's money multiplier is influenced by. Again, the economic survey talks about money multiplier, which is a very important topic for prelims. So let us see a few questions or statements from economic survey. A country's money multiplier is influenced by. Money multiplier is definitely influence. Influence itself is a very broad keyword, first of all. Okay. So more or less, if they are plain, okay, the answer could be all. So the amount of cash individuals and business hold, definitely it will impact money multiplier. If they hold more, what will happen to money multiplier? If the individuals hold more cash, what will happen to money multiplier? Decrease or increase? Definitely money multiplier will reduce. If there is financial inclusion, if there is more financial inclusion, then what will happen? Definitely money multiplier is increase. The reserves that banks maintain. Okay, so whatever the reserves that banks maintain, that also will influence money multiplier. Very good. So here there is M1, M2, M3, M4. Again, survey again talks about one M1, M2, M3, M4 as well. So basic, you have to know what is M1, M2, M3, M4. And sometimes in interview also they have asked what is M1 or M2. So some economic questions have been asked in the interview as well. So kindly go through, revise this properly. And basically monetary base is more of liquid cash. Okay, so liquid cash is monetary base. So basically M1 or M0 also comes under monetary. So M0 and M1 generally we call it as monetary base. It is mostly talking about the liquid like currencies. Okay, currency, directly currency. Or the M0 also includes reserves with RBI as well. Okay, the bank deposits with RBI also comes under monetary base. Okay. Then there is, and it is also called as narrow money. Which is broad money here? M1, M2 is narrow money, or M3, M4 is narrow money? Narrow, which is called narrow. Narrow is basically, yes, M0 or M1 or mostly M2 as well. Whereas M3 and M4 come under broad money, broad money. So narrow money is mostly cash, okay, or easily which you can liquidate, okay. Whereas M3 and M4 is broad money. Okay. So this difference also you have to know. So which of the following is considered as leakage from banking system? So the survey also talks about leakage from the banking system. So when they give you this word leakage, so is which of the following is considered as leakage from the banking system? Leakage from banking system means both. Answer is both. Okay. It's not just one. Answer is both, because when individuals keep more cash, what will happen? Does banks have money to lend? Does banks have more money to lend? Definitely no. Less money to lend. And same thing if I say the reserves of the banks hold in central bank, can the banks lend this money? Again, no. Okay. So that is called leakage. That is called leakage. So leakage from banking system is basically, yes, the money which is not there with banks to lend to the customers. Okay. So lend to the customers. If they are unable to do it, then such money basically is called leakage from banking system. Okay, this has been explained in the survey as well. Okay, what is this leakage and all? So these two type of leakages have been mentioned in the survey. So more or less, we have seen like multiplier has been increasing over years. Yes, but is it steadily increasing over years? So in the exam, they will give you one statement saying that money multiplier in the economy is steadily increasing over the decade. They'll say decade. They'll use the words decade or 5 years generally. Okay. So is it steadily increasing? Steadily increasing, steadily increasing. Study means, see, remember the graph has to be in this way. Whereas the graph you can see here, it is in this way. Okay. So definitely it is not steadily increasing. It is decreasing, increasing, decreasing, increasing. Okay. Next, what is the significance of restructured standard advances ratio for a bank in India? So I think if you have seen PYQs, there is a question on interest convergence coverage ratio. If you remember, interest coverage ratio. So this question has been asked, and the interest coverage ratio is actually discussed in the survey also. But in the same lines, they may ask you restructured standard advances ratio for a bank in India. So what is this basically, and try to answer this question. Yes, the answer is 1 and 2, because generally, yes, though there is some positive aspect that banks are restructuring the loans, especially by stopping them from becoming NPAs. Okay. But still, if the ratio is high, can we say there is a lot of risk that they can become NPS? The restructured loans, still there is a high risk that they can become NPS. Okay, so that is the reason generally even the ratio, if it is high, okay, you can say that still that risk will be there. Okay, so higher is basically not right. Okay, lower RSA ratio is better always. Lower RSA ratio. So survey also talks about kind of decreasing RSA recently. So it says that recently in most of the banks, the RSA is decreasing. So you can see in this point, I have mentioned that you don't have to remember the numbers. Numbers are only just for understanding. You just remember the observation. Okay. So observation is that RSA ratios are basically decreasing. Okay. So decreasing RSA is actually better for the banking system. So restructured standard advances ratio refers to financial metric that calculates the proportion of restructured loans that are still considered standard. Okay, restructured loans are still considered standard compared to bank's total gross non-performing assets. So all major banks groups reported a decrease in this particular ratio. Okay, now try to answer this. Interest rate ceiling on foreign currency non-resident deposits results in more foreign capital inflows. True or false? So basically, we are talking about NRS currency, NRS money. Okay, so foreign currency non-resident deposits results in more foreign capital inflows. True or false? Sorry, I think I did not mention increase or decreased. Okay, interest rate has been increased, let us say. Interest rate ceiling has been increased. Okay. So if interest rate ceiling has been increased, definitely there will be more foreign capital inflows. Foreign capital inflows. What is the limit of collateral-free loans for small and marginal farmers? What is the limit of collateral-free loans for small and marginal farmers? It's a major change recently. It's a major change that has been done recently. Collateral-free loans for small and marginal farmers. Earlier it was 1.6 lakhs. Now it is 2 lakhs. Okay. So for 2 lakhs till 2 lakhs, there will be there is no collateral as such required. So there is a limit of collateral-free loans for small and marginal farmers, and recently government has increased the collateral-free loans from 1.6 lakhs to 2 lakhs. So survey also mentions especially this, and this is an important topic for UPSC as well. Okay, so free loans, and even in interview also they may ask you, like recently government has increased this, how much is the value also they may ask. Some static factual values also they are asking in the interviews. Next, Bharat Connect platform, formerly Bharat Bill Payment, is conceptualized by NPCI. True or false? Okay, it is not conceptualized by NPCI. It is conceptualized by RBI. Okay, not NPCI. RBI. Yes, the bill payment is basically run by NPCI. Okay. Also, it is run not exactly by NPCI. It's a subsidiary of NPCI. Is the NPCI Bharat Bill Pay? It basically runs the entire Bharat Connect platform. Whereas it's actually the concept has been conceptualized by RBI. RBI. So recently they are saying that in terms of value of funds settled, 64% transactions are for credit card bill payments. Okay, value on the basis of value, if you see, highest are credit card payments in the Bharat Connect platform. Credit card payments. Okay, like people spend and finally you have to pay that credit card bill, right? So they are paying through Bharat Connect platform. So value, if you see the value of like 100 crores, okay, value. So that is more like most of the percentage is credit card bill payments. Whereas if you see just transactions, which will be the highest? Not the value, just transactions if you see. Yes, it will be electricity payments. So this is also one observation given recently, saying that most of them are credit card payments by value, whereas most of the other transactions if you see, they are electricity payments. Fine. Now survey also mentions about Hiroshima AI process. Hiroshima AI process. Okay. So here, what questions they may ask in the exam is, first of all, it is launched by. So who launched Hiroshima AI process? G7 nations. G7 nations have launched. Second thing, basic objective you have to see. What is the basic objective? Democratizing and openness and inclusive and fairness. So these are the basic object, like AI governance. Yes, AI governance. Next, is it voluntary? Is it a voluntary code of conduct? Definitely, yes. This is also one keyword they match. It's a voluntary code of conduct. Next, it is being developed by OECD. This code of conduct. This code of conduct is basically being developed by OECD. Okay. So RBI announced the establishment of committee to create a framework for responsible and ethical enablement of artificial intelligence in financial sector. So in the interview also, if they're asking you what initiatives India is taking, especially to address this AI governance and all, you can definitely mention RBI also. RBI is taking a particular initiative, especially in financial sector. Okay. Which of the following are related to primary capital market? Primary capital market. Generally, letters of credit and all, they do not come under as such capital market. Letter of credit is nothing but a business transaction, just trade. Okay, the banks will say that the buyer bank will basically transfer to seller banker. Okay, so that is basically letters of credit, nothing. So it is a very more of a direct transactions. Okay, they do not come under as such capital market. Next, there is something called participation certificates. So I'll try to explain this. It is a kind of opposite to municipal bonds. Okay, and whereas IPOs, yes, IPOs are primary markets. Mostly long-term loans are also basically capital market itself. First of all, long-term loans come under capital market itself. Okay, so long-term loans also you can consider it as primary capital market. Venture capital is also comes under mostly primary capital market. Okay. Whereas this letters of credit and participation certificates come under as such not primary capital market. So let us basically see participation certificates. What is it? So participation certificates are basically opposite of municipal bonds. For example, in municipal bonds, can I say basically you invest and you get interest? So there is a lot of liability from the side of the municipal commissionerate as well, whichever is taking this municipal bonds, issued municipal bonds. It has to pay the interest, right? It has to pay the interest, and finally it has to pay the principal as well. Okay, if you invest in the municipal bonds. Again, municipal bonds are kind of long term as well. Okay, long term capital instruments. Whereas participation certificates means, for example, let us say municipal corporation is there, municipal corporation. Let us say there is some land. Okay. Now this land municipal corporation basically leases from a particular person, let us say. Okay. So municipal corporation basically leases this particular land. Now what happened? So to lease this land and all, you need to pay some amount and all, right? So what does municipal corporation do is it will issue participation certificates saying that okay, you can directly invest in the amount that has to be paid here to lease the land. Okay, for example, let us say to lease the land, you need to pay, let us say some 10 lakhs. Okay, so now you will say that, okay, you have 1 lakh, so you will pay 1 lakh and take that participation certificate. So, for example, how much share you have taken here? You have taken 10% share. Okay, now what happens? So now this municipal will try to build some shops here. Okay, for that also you have to pay whatever money you are paying, right? It is basically going for building this complex as well. Okay, building this complex. Fine, for building this complex, basically it is almost 10 lakhs. So you have given 10%. Now this municipal commissionerate will get, let us say, rents. Can I say? Will it get rents from this particular complex? Definitely will get rents. And in this rents, how much will you get? How much percentage will you get? You will get your 10%. So this is how municipalities also use. Okay, you can say similar, kind of similar. Okay, but some differences are there. So that way I'll discuss in the actual economics class. Okay, writs and in which I left it for the economic class. So I'll discuss there. So here participation of certificates. So in this 10% back you will get. And so here basically, is there a lot of liability on the municipal corporation or there is less liability on municipal corporation in participation certificates? Is there less liability or more liability? There is completely less liability, less liability. Where is more? See, more liability is in bonds. When they issue bonds, they have to pay the money, right? Municipal corporation has to pay the entire interest, principal, everything they have to pay. But in this, what is happening? Directly rent will come, and from that rent, 10% will go to the participation, whoever is participating in this. And also, direct money is going to the construction. Even the municipal commissioner is not giving any money. Okay, the money whatever comes from this particular investor, it will directly go into the construction of the complex and all. From that 10%, whatever rent is coming, that particular investor will take it. So as such, there is very less liability on the municipal commissionerate. So this is how some of the municipalities basically use this participation certificates rather than bonds. See, it is a kind of intermediary, you can say. Okay, so it has to construct, yes, it will construct the building, but with whose money? Okay, particular year maturity and all will be mentioned in the participation certificate. And how many years, till how many years will be paid and all will be mentioned in the certificate. Okay, so liability, always remember whenever we talk about liability, liability is of financial liability. Okay. So next, corporate bond market. So the survey also talks about corporate bond market. So as a percentage of GDP, the corporate bond market is only 18% in India compared to 80% in Korea or 36% in China. So here basically corporate bond market is very less in India, percentage 18% of GDP. In contrast to equity market, the debt market in India remains undercapitalized. True or false? In contrast to equity market, the debt market in India remains undercapitalized. Definitely true. Just now we discussed also, more or less we have seen market capitalization in stocks is almost 140% of GDP. Whereas actually debt market in India is relatively undercapitalized. Okay, most of the investments are going in the equity market rather than debt market. Majority of corporate bond issuance happens through route of private placement, which actively deters the participation of retail investors. So majority of the investment in corporate bonds is through private placement or retail investors. Retail investors are nothing but individuals. like us. Okay, when we invest individually in the stock market, we are called retail investors. Okay, whereas you can see as such in this bond, the corporate bond market, the participation of retail investors is very less. So mostly it will be private placement. Okay, so definitely this is true. Next, corporate bond issuance from manufacturing and non-energy sector dominates the overall bond market. Is it true? Corporate bond issuance from manufacturing and non-energy infrastructure sectors dominate the overall bond market. From manufacturing and non-energy infrastructure sectors. Again, in India, the bond market is dominated by financial service sector. Remember, the entire bond market is dominated by financial service sector rather than any other sector. In fact, the lowest participation in bond market comes from manufacturing and non-energy infrastructure sectors. Okay, in fact, lowest participation. So this is definitely wrong. It's a false. It's false. So the highest participation comes from financial service sector. Can you give me examples of financial service sector? What are these financial banks? Very good. NBFCs, mutual funds, pension in the sense, I mean, insurance. Yes, insurance companies. Yes, all this come under basically financial service sector. So I have given examples here. You can go through. So financial companies, insurance companies, investment companies, banks, everything will come under financial sector. And these are the companies which are issuing corporate bonds more in India rather than manufacturing and non-energy sector. Okay. So which of the institutions, committees regulate independent regulatory bodies in India? Which of the institutions or committees regulate independent regulatory bodies in India? Okay, the survey mentions answer as all. Okay, in the survey there is a particular page in which it talks about institutions regulated. Okay, especially independent regulators, and there have been given 5 points in that. In the 5 points, these things are mentioned: Committee on Subordinate Legislation, Standing Committee on Finance, Ministry, the parent ministry, Comptroller General, as well as Judicial Review has been mentioned. Okay, so answer is all. Next, Global Cyber Security Index. So Global Cyber Security Index is published by Global Cyber Security Index is published by. It is published by ITU. Yes, Datri. I'll post that from the survey. Clearly, it mentions that yes, Comptroller Auditor General does particular type of regulation. Okay, it does not say that it actually regulates the working of these institutions and all. It just mentions that a particular type of regulation is done by Comptroller Auditor General. That I'll post in the group. You can go through. Just remind me after the class. Next, Global Cyber Security Index is published by ITU. So India has marked a significant milestone in its cybersecurity efforts by achieving top tier in Tier 1 status in Global Cyber Security Index. Okay, published by ITU, which is given in the PIB. Okay, this is given in PIB as well as Economic Survey. So it is considered as a role model country demonstrating a stronger commitment to cybersecurity. Who is the nodal agency? Department of Telecommunications. Okay, consider the following statement regarding Open Credit Enable Framework, OCEN. It is pronounced as OCEN. So Open Credit Enablement Framework. Okay, so first of all, it is announced where we'll see. Second thing, remember these type of things, open credit enablement framework, are they centralized or decentralized? They are decentralized open credit networks which codifies the flow of credit between borrowers, lenders, and credit distributors. It's a decentralized open credit network and is part of larger framework of open APIs of India stack. It is almost like, let us say, it is like UPI, okay, or it is like ONDC. Okay. So it is like UPI for basically credit system. So you can say that. So where it has been announced, Global FinTech Festival 2020. So OCAN was announced, and it's a decentralized open credit network which codifies the flow of credit between borrowers, lenders, and credit distribution. It's similar to UPI and ONDC, but for credit. Okay. So it is part of larger APIs called India Stack. So in the exam, they can give you which of the following come under India Stack. Like for example, UPI comes under India Stack. ONDC also comes under India Stack. Even OCAN also comes under India Stack. Next, consider the following regarding Unified Lending Interface. Unified Lending Interface. It's initiative of RBI, applicable to MSMEs and land-owning farmers, but not tenant farmers. Unified Lending Interface. So it's an initiative of RBI. Yes, definitely it is an initiative of RBI. And yes, it is applicable to MSMEs, landowning farmers, as well as tenant farmers. Tenant farmers. So how for tenant farmers also? See, basically it is again same like that OCAN framework only. So all the credit data will be available. Not only credit data. If I say land records are also available in this unified lending interface, it's right or wrong? Even the land records are also available. It is true. But tenant farmers do not have land records, right? But how do they give credit to the tenant farmers? So this system will provide the input data of that particular tenant farmer. Means that tenant farmer might have taken some fertilizers. Okay. Some inputs he might have taken from the cooperative, right? Some cooperative bank will be there or cooperative, local cooperative will be there. So that data as well will be accessed by under this unified lending interface. And based on that also, they can provide loan to the tenant farmers. So here land records will be there. The data from the corporate cooperatives also will be there. So in this way, it is going to access wide range of data, and this banks and all who are giving loans, they will have access to this data and they can give loans according to MSMEs and farmers. So especially first they are trying this unified interface for MSMEs and farmers, including tenant farmers. Okay. For example, you can see here a dairy farmer is there, he is seeking a loan. The lender can find data from the milk cooperative to know amount of cash flows, land ownership status from land record states. So in the interview, you can use these words, especially now the new trinity will be JAM, UPI, and ULI. Okay, so if you say this in interview, definitely it will be catchy as well. So JAM, UPI, and ULI will be the new trinity, will be a revolutionary step forward in India's digital infrastructure. Okay. So unified lending interface that facilitates the seamless flow of customers' digitized financial and non-financial data from multiple data service. Okay, now coming to national infrastructure pipeline. So NPI serves as a centralized platform. Again, here you can see the centralized platform. It is not decentralized. So National Infrastructure Pipeline is a centralized platform for hosting projects of states, union territories, and central ministries. Target investments almost 111 lakh crores, and the projects are tracked and reviewed. And especially this portal is called India Investment Grid. Okay, this portal is called India Investment Grid. Anyways, National Monetization Pipeline is for greenfield projects or brownfield projects, or both. National Monetization Pipeline is for greenfield projects or brownfield projects. It is basically for brownfield projects. Brownfield projects means already some land is there, how to utilize it and all. So already some assets are there, how to utilize those assets. They come under brownfield projects. Greenfield means completely new investment. For example, here, tell me what is greenfield investment? FDI, where a parent company starts a new venture in a foreign country by constructing new operation facilities. So the word new should be there in the greenfield ventures. So in the exam, they asked you which of the following are greenfield. So Vijayawada, do you think it will be greenfield? Because we already know that it's a capital from long and there is an airport there. So mostly it will be greenfield or a brownfield project. It is a major city from long back, right? So in that way, if you just apply some logic, you could have answered that question easily. If you remove Vijayawada, you will get the answer in that particular question. Anyways, in the elimination techniques, I will discuss that. So considering the following statements, Vadhavan port is a brownfield project. It is projected to be among the top 10 ports in the world. And it's a joint venture of some two institutions. Is it a brownfield project or a greenfield project? It is a greenfield project. It's not a, yes, newly commissioned almost by 76,000 crores. So it is a new project, means greenfield project. Rest of the statements are right. Where it is located? Which state? It is located in Maharashtra. Okay, next, Climate Smart Cities Assessment Framework is an initiative of Ministry of Environment and Forest and Climate Change. It has almost 28 indicators across 5 categories. Implementing agency is Quality Council of India. Climate Smart Cities Assessment Framework. So this also has been discussed in the survey. So Climate Smart Cities Assessment Framework, basically there are 28 indicators across 5 categories. You don't have to remember this 28, but at least remember the 5 categories. Which are the following are the 5 categories under Smart Cities Assessment? They are energy, urban planning, mobility, water and waste. And for interview, what you can use, they'll not ask you what are the categories and all, but in the interview, you can align your answer on these lines. Like if they ask you what assessment should be there, okay, what in smart cities, basically what should be there, immediately that 5 points you can address. Okay, you can talk about green buildings, you can talk about green cover and biodiversity, you can talk about air quality, you can talk about water management and waste management. So one thing when we are taking mock interviews and all, one thing we are observing is immediately you are unable to generate those 3 or 4 points. So if you by heart these things, easily you will be able to generate those 4 or 5 points in that 30 seconds. Okay, so remember this 5 points. So if they ask about smart cities, what should be done, what as a DM you will do, you can clearly talk in these lines. You will say, yes, you will focus on this green buildings, you will focus on biodiversity, you will focus on air quality, waste management and water management. Okay, so in that way also it will help you. Okay, uncertainties in global trade. So it mentioned about great election year of 2024. Great election year of 2024 means during which more than half of the world's population was exercising their franchise. So recently in 2024, more than half of the world's population was actually exercising its franchise to elect their new government. That is the reason 2024 is called great election year of 2024. Apart from that, and because of this, what will happen? Whenever there are elections, can I say there will be uncertainty of policy? Whenever there are elections in so many governments, definitely there will be uncertainty in policies. So that is also one reason why there was uncertainty in the recent years of 2024. Next, trade tensions and policy changes among major economies and brought in the Panama Canal severely disrupted international trade, affecting supply chains around the world. So this also has been one of the reasons. Next, friendshoring and nearshoring, nothing but mostly providing favoritism towards only friendly nations. Okay, so that is called friendshoring. And non-tariff barriers also have become one of the major uncertain points in global trade. So friendshoring is growing trade practice where supply chain networks are focused on countries regarded as political and economic allies. Political and economic allies. For example, Russia and China trade depend on EU as reduced. Okay, and the US dependence on China has declined in recent years. In contrast, the dependence of Russia has increased on China. So what is this called? Russia's dependence on China is called, you can say, friendshoring. It describes the process of a company relocating business operation to nearby country, often with a shared border. It is called nearshoring. And reshoring is also known as inshoring or onshoring. Reshoring is when a business transfers operations back to its home country. It is called reshoring. Anyways, you have to know about this word. This word is being discussed in the survey. Friendshoring. Okay, now which are the examples are of non-tariff measures? Mostly this question may come in 2025. Okay, because lot of discussion is going on non-tariff barriers or measures. They'll ask you a simple question: which are the following are non-tariff measures? See, quotas. Quotas are basically non-tariff barriers. Remember, quotas. Subsidies again non-tariff barriers. Okay. Technical barriers. Technical word is again non-tariff. Technical barriers in the sense give me example of technical barrier. Sanitary measures. Yes, very good. Phytosanitary measures. They are also technical barriers. And licensing requirements, they also come under technical barriers. Voluntary export restraints. So again, quotas, restraints and all again come under non-tariff measures. Carbon border adjustment mechanism also may come under non-tariff measures. Okay, carbon border management is completely different. It is different from tariffs. Even the deforestation regulation also can be a non-tariff measure. Whereas combined rates is not. Combined rates is nothing but mixed tariffs. That's it. Okay, the other name of combined rates is mixed tariffs. Tariffs basically are not non-tariff measures. Okay, except 8. All 7 points are non-tariff measures. Even economic survey also discussed about carbon border adjustment mechanism as well as European Union deforestation regulation, how it is going to impact India. Okay. So especially for example, in carbon border management mechanism, which industries are going to impact because of this mechanism? Very good. Steel is aluminum, cement. These type of industries are going to impact because they will be charged some under this mechanism. They may increase the costs, okay, of exports. Next, even in this deforestation regulation also, they may impact, like for example, coffee. Okay, coffee generally we export to Europe, right? It also can be impacted. So, and it is observed that the 3 sectors which are going to be impacted because of this non-tariff measures are agriculture, manufacturing, and natural resources. Agriculture, manufacturing, and natural resources are the main things which may impact. Natural resources like coal. Yes, you have mentioned coal. So it may be impacted. So relative common border adjustment mechanism exposure index is published by. So this index is mentioned in the survey also. It is published by World Bank. It is published by World Bank. So here you can see again which has the highest percentage in non-tariff measures. Which has the highest percentage in non-tariff measures? It is technical barriers to trade. So this also try to remember, at least 1, 2 you remember rest. So next is export related measures. So one is export related measure, another is technical barriers to trade. And some keywords are there in the economic survey called barefoot technician. Okay, I don't know if they ask you, but sometimes they ask bank Sati and all. So that is the reason we are trying to cover this. Barefoot technician. So bank Sati was asked once in the exam. So in that context, maybe they may ask barefoot technician. So it is mentioned in the survey as well. Who is this barefoot technician? Which scheme they are associated with? They are associated with the major rural scheme, which is engineering. Yes. Okay. So they are nothing but they'll be trained on some technicalities of taking up works and infrastructure projects under MG Narega. Okay. So you can go through this. So basically, the point is infrastructure development. Okay. So that's it for today. And any other important aspects we'll anyways try to cover in the coming current affairs classes as well. So any observations and all we'll try to cover. Rest other aspects of survey and budget, Bright Sir will be covering in the next class. These two classes are very important. And the test also will be on economic survey and budget. Again, you have seen, right, how we need to read the economic survey. It is not that you need to remember every aspect of survey, not required. Major things like these words of what is happening in the global trade, what are these uncertainties, the examples they may ask you. Okay, the reasons they may ask you in the exam. Or the major words like non-tariff barriers, what are they? What is capital market? What is primary market? What is greenfield projects? So these type of things they may ask in the exam. Okay. So broadly you have to read it. Okay. So don't go into very in-depth or something not required. Very broadly, what are these words? How a question can be asked based on PYQs. In that way, you have to prepare both economic survey and budget. So the test also will be mostly on this. Okay. So rest again schedule will follow from next week. The same schedule will be followed. Only this week we have discussed like we have shifted this economic survey and budget. Okay. So again from next week the same schedule we will follow. So thanks everyone. If you have any doubt you can ask me on Telegram. And kindly give the test. Tomorrow we'll discuss the test. Or test 12. Okay, test 12. This we have given questions on mostly on culture part. Okay. So kindly revise Nitin Singhania properly and revise PYQs, and after that you can give the test. See, questions may look a bit difficult or something, but try to answer them according to the mindset. Okay, because it's not easy to know every aspect of culture. It's very, very, very difficult. Culture is very vast. You will not be able to know everything in culture. So always try to also address the questions using examiner mindset. So that's it for today. So thanks everyone, and we shall meet in the next class. Take care.